who would expect the president to be firing the chairman of the Fed unless he gets 0% interest? Or 401ks to be able to turn into hedge funds and buy all these alternative investments.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Gary Lutz. John Rubino is with us. John, it's been a couple of weeks, but hey, Trump GPT. He seems to be 5 steps ahead of all of his adversaries, both domestic and international here. What's going on?
Hey, Gary. Well, you can use a lot of adjectives when you're describing Donald Trump, but two that you can't help but use are consequential and busy. The guy hit the ground running because they knew they had 2 years before the midterm elections, when it's completely conceivable that Congress flips, and then the purse strings are in the hands of people who don't want to finance any of Trump's initiatives. So the government is basically paralyzed. So Trump knows he's got to get everything done, or a lot of stuff done, in just these 2 years, and he's not wasting any time. Everything that is on their wish list, they're just trying to do all at once, and they're letting the courts sort it out. And it's fascinating to watch, the district court judges impose nationwide, what's that term? Injunctions, right? Injunctions?
Yeah, sure.
Where they say, no, not only can't you do that in this case, but you can't do it anywhere in the country, not just in my district. And then that bumps up to the Supreme Court, and the Supreme Court just lately said, no, these nationwide injunctions are unconstitutional. So that basically opens the floodgates for Trump to do all the things that he wants to do. And he's winning a lot of other things in the Supreme Court.
Yeah, he's winning everything, basically. He's had like 5 major victories. And one of them was the fact that he could just fire people in any department to his heart's content. And this was like a major sticking point because they believed that they were covered by the Impoundment Control Act of 1974, which basically said if the president wants to stop spending, he's got to go back to Congress. And now he can just unilaterally say, we're not paying it. So it's almost like he doesn't even need Doge anymore. If he just decides that there's a department he doesn't like, he can't get rid of the department, but he can get rid of all the people in the department. So what's the difference, right?
Well, see, that was always the big question. Like, who's in charge of the administrative state, after all? Because technically they're part of the executive branch, but they're funded by Congress. So can the president refuse to spend the money that Congress has allocated on a given thing? And that was the question that just kind of got answered now, right? No, the president
indirectly
does not have to. Yeah.
Indirectly, and I predicted it too, through Trump GPT. Trump GPT is running the White House, John. Look, as a lawyer, I could tell you that each one of those executive orders probably is several hundred hours worth of work. You don't just write them. You have to research every law they affect and every other executive order they affect, hundreds and hundreds of hours. No sooner did he take his hand off the Bible, John, than he was signing executive orders. And the thing is, he maybe had a small-sized law firm on this case, but none of it got out. Nobody knew it was going to happen, and yet it happened.
Well, we knew they were working on a transition this time, because the first time he got elected, he didn't think he was going to win. So it was just him. All of a sudden, he was the president. He didn't know, who to hire and whether they were going to work with him or against him. And so it was a really, other than the Supreme Court that he named 3 conservative justices to, he didn't accomplish much of anything. This time around, he had, the Federalist Society and all the think tanks out there preparing personnel and these executive orders. And they had AI, obviously, because they couldn't have done it without AI. But they had this long list of stuff they were going to do all lined up for day one. And yeah, it's been a really amazing performance to watch a president come in and just start doing stuff, tear things up, or impose his will on all kinds of things where the president really never had much of a say. And he's getting away with it. And the wild thing is, he might actually get to name a couple more Supreme Court justices.
I think he will.
Just in that sense, he's incredibly influential.
Couldn't agree with you more. And it's, love him or hate him. I mean, there's things I like about him. There's things I really don't like about him. Like things like debt. He doesn't seem to care about how much debt gets run up. And, this idea, like, I'm no fan of Jay Powell's, but to throw him out so you could cut the rates from 4.5% to 1%. Michael Pinto even says, I'm a supporter of the administration, but I can't support that. You know what that would do, cutting the rates to 1%? I mean, we'd see an economic boom, but we would see a currency debasement that the mother of all currency debasements, John.
Well, yeah, Trump is a real estate guy, and you live and die on interest rates if you're in real estate. So to him, low interest rates are the only completely good thing in the world, probably. No bad side effects to it at all in his experience.
No malinvestment, right?
Yeah, nothing like that. If you can borrow money for 0%, you can make money in real estate. But yeah, okay, here's the way this might play out is that, yeah, he gets his way with the Fed one way or another. They start cutting interest rates pretty aggressively at the short end of the yield curve. So the Fed funds rate goes down to 0 again. And then long-term rates is where there's the question, because will the bond markets accept that? In other words, will long-term interest rates fall along with short-term interest rates, or will the bond traders rebel and start pushing up long-term interest rates? If they do that, then the federal government has to step in with yield curve control and start forcing down long interest rates too. And to do that, they have to basically create a tsunami of dollars with which to buy those 10 and 20 and 30-year treasuries. And then that shifts the pressure over to the currency. So in other words, you get inflation if you try to push long rates down really dramatically, and that's the dollar falling in value. And there's our end game, and it could happen within the next few years where the dollar starts falling in a kind of an uncontrollable way, and there's your crack up boom, right? That's the end of this process where people start shifting their dollars into real assets. They start buying gold and silver and farmland and everything. The price of those things go through the roof, and you get hyperinflation in that sector. And then, the dollar is basically toast, and we have to do the monetary reset. So we could be living through monetary history, right? Yeah.
The more we go on, the more inevitable. But good news in that respect is that your 401ks, you're now going to be able to do alternative investing, right?
That adds fuel to this fire. They have just decided, the federal government, to allow 401k plans to invest in alternative assets. Because right now, most 401k plans are in stocks, bonds, and cash. And mutual funds that hold those things. But now they're going to be allowed to buy private equity and hedge funds and cryptos and gold and silver, which is a really huge deal for gold bugs, because there's multiple trillions of dollars in 401k plans. And, if you've got a 401k plan that has mostly stocks and bonds in it, and then you find out that you're allowed to buy gold, and that gold has been the best performing major asset of this century so far. The past 25 years, gold has outperformed the S&P 500. So you're going to want some gold. So let's say you put 5% of your 401k in gold and silver. That doesn't sound like much in the scheme of things, but it's a massive inflow of capital into precious metals. Gold is not that big, and silver is minuscule. Yeah. And I think a lot of people, if they listen to podcasts like this one, are going to favor silver, because silver is way cheap compared to gold. And so, you get a $500 billion flowing into silver, and you've got $100 silver right there, and
Well,
that's totally conceivable in the scheme of things now. So that's something that probably people aren't paying too much attention to, but is actually a very big deal for precious metals and for Bitcoin, and for real estate. If you can all of a sudden, if you have a 401k and you're a hedge fund, a lot of wild things can happen.
hey, so as you were mentioning that, I looked it up, and as of March 31st of this year, total amount held in 401k accounts was approximately $8.7 trillion. But listen to this, the average balance, according to Fidelity, was 127,000. So you take the average person said, I'm willing to I'll take $7,500 risk here, throw it into some gold and silver, and put a little into Bitcoin, right? And before you know it, all of a sudden, that is a huge amount of money going in there. John, just last week, 2.2 billion went into the Bitcoin ETFs. All right, that's not even owning the actual thing. It's really synthetic. It's not synthetic, it's derivative. All right. But the amount of options, open interest in the options is like 35 billion. And there's no Bitcoin trading, like less than 7% of the total. And just in the inflow last week, that's 34,000, 35,000 coins that have been now down the rabbit hole that will never be seen again unless there is a massive panic and people start cashing in their ETFs. And maybe that's what they'll try to trigger. But right now we're close to $117,000, $18,000. I don't want to say exact, but this has the potential to be wildly disruptive to all alternative investing, John.
Yeah, another way of looking at that from the precious metals point of view is that right now, gold accounts for less than 1% of investable capital. So if 401ks start saying, okay, I'll throw 5% in gold or something like that, since it's the best performing asset of the century, that quintuples the amount of money that the average 401k has invested in gold and silver. So that's, those numbers actually probably can't happen because there would be no gold and silver left if 401ks tried to go 5% into precious metals. So
don't you love it?
Titanium, yeah. Yeah. So we're at we're in the early stage of what is looking like a spectacular precious metals market because you got the president demanding 0% interest rates. People with 401ks suddenly being able to buy gold and silver and cryptos and things like that at a time when those are the best performing assets, when everybody's looking at them and looking how much they've gone up, which will encourage regular people to buy more now, whether it's at the peak of the market or not. That's an awful lot of money flowing into the stuff that you and I have been pushing for all these years. So it could be that we turn out to be not only right, but right in a spectacularly unpredictable way. The stuff that who would expect the president to be firing the chairman of the Fed unless he gets 0% interest, or 401ks to be able to turn into hedge funds and buy all these alternative investments. That wasn't part of the plan, but it's a very welcome part of the new world for precious metals.
Hey, John, it's like I was at the Bitcoin 2025 conference in Vegas. I'm telling you, if you have a chance to go to one of those, you got to go because the amount of money there was staggering. Bitcoin whales walking around. Remember Trace Mayer? He was there. He's a Bitcoin whale now. He told us to buy it $10, but I was waiting for it to go down to $7 so I could feel like I got a deal, which of course it never did, and I never bought it until much, much later. But he told me that nearly half of the Republican Party's contributions are coming from the crypto sector. And when you think about that, it all makes complete sense now. Trump the Trump coin, the Melania coin, all of their involvement in crypto. It's really impressive, isn't it?
Yeah, those guys, they basically just pulled out the checkbook in the last couple of years, and they're buying Washington D.C. And
Yeah.
you know the obviously we don't want our politicians to be owned by special interests, but if they have to be owned by any particular special interest, cryptos is not bad because crypto
Yeah.
guys are kind of gold bugs at the same time. By the time you understand how cryptos work, you know enough about money to know the difference between sound money and fiat currency. And so you respect gold for its role in that differentiation. And so I think a lot of crypto money. Oh wait, that's right. We didn't talk about this beforehand. Did you see the crypto company that just bought a big piece of a gold silver royalty company?
No, I didn't hear about that.
Okay,
When did that happen?
Tether.
Today?
No, probably a month ago, maybe. But Tether,
Really?
which is the big
Oh, yeah, yeah.
um, token company. What do they call it? I'm sorry. I should really have that at my fingertips. But the kinds
It's
of
a stable
coins,
coin.
stable
Stable
coins,
coin.
stable coins. Okay, Tether is the big stable coin
Yeah, that's what
company.
everything gets traded into Bitcoin in eventually.
Yeah. But in the meantime, it's you buy it. For instance, Tether has bought a bunch of gold, put it in a vault, and they've issued tokens, which are
Yeah, of
stable
course.
coins against it. Yeah, and so that's good for precious metals there. But then Tether also went in and bought a large, almost controlling stake in an emerging royalty company. And I had somebody explain the point of that to me. And one of the points is that similar business model. You know, a stablecoin company, for instance, has massive revenue per employee, and so does a royalty company. And
Yeah.
if they're going to start coming out with gold stable coins, then they
Yeah.
want access to physical gold, and so they're looking
Ah,
into the mining industry and the royalties and everything. And that's there's way more money in cryptos that's available to
yes.
flow into the royalty companies than is currently the case. So this could be
Hmm.
another big deal for a segment of precious metals. If crypto companies decide that that's an interesting diversification, then look out
Yes.
for the junior royalty companies.
Oh, yeah, man. Like this thing is really going to explode here. Uh, my theory, I shared it with you last time, I think, was that basically they're going to use the strategic Bitcoin reserve to pay off the US debt. All right. Because, John, can you name another investment that if you put 10 cents into it in 2010, it would be worth 120,000 now?
Yeah, that's a hell of a run, and
So
this is
go
such
to
a
10
complex question
million,
because
100,
yeah, yeah,
they're not
yeah.
making more of it.
No, and the mechanics of paying off the national debt with Bitcoin, that might take a whole show for us here too, because that's really interesting. Like how do you maintain the value of Bitcoin while you're handing it out to pay, stuff like that. But um, a strategic Bitcoin reserve is an
Hmm.
idea that only Trump could come up with, and
Yeah, well,
is really
you got to make
consequential financially.
right. You got to make something out of nothing, and that's what Bitcoin is.
That's my issue with Bitcoin is I still haven't got my head around how something that doesn't exist in the physical world can actually be a real thing. I'm way more comfortable with physical precious metals than with computer
I know.
code. And that doesn't mean it's not right. It means that I don't get it yet. So maybe there's nothing to get, or maybe I'm just totally missing the crucial part of the process that makes that real money going forward. But
Oh,
they don't need me.
well, so like I was totally with you for a lot of years on this, John. I really was. But now I see that the appetite for Bitcoin, the demand is about to go astronomical. it is. And there's no Bitcoin out there. 7% of all the coins produced are trading. And that number went down last week after 2.2 billion went into these Bitcoin ETFs, and another 2.2 billion went into like Ethereum ETFs. Ethereum, though, they keep making it. Bitcoin, 21 million is max. They halved it every 4 years. Only 450 Bitcoins per day are being produced. Now, like, it's just a piece of code. How can a piece of code be worth that much? But the key is like getting people to believe that it has worth. Like, was gold worth anything when we had cavemen? It was worthless because probably you couldn't get a sharp edge on it, so you couldn't make it into a weapon. And the cave woman wasn't really concerned about having a Rolex watch, a Rolex president. It had no value, but over time, it became valuable. And I think the process here in cryptos is exactly the same, John. It wasn't worth anything initially when nobody wanted it, but now that people want it, it's got value. And the U.S. government is probably sitting on the largest cache of Bitcoin in the world, hundreds of thousands of coins. So a couple other things. New York is in the process of a communist takeover, as well as Minneapolis. Are they going to let it happen? Are the Democrats that delusional that they think this is good for their party?
Well, now, it's really important to put this in context. But yeah, some very left-wing guys are winning some elections, but they're running, at least Mondami in New York, ran basically a populist campaign where his thing was affordability, and populism. Obviously, that's what Trump did. Trump ran on a platform of, hey, you're being screwed over by a handful of rich people. I'll get it back for you. Put me in office. I will get what was stolen from you and give it back to you. The guy in New York did the same thing. People who don't have your best interest at heart are running up rents, and they're making food more expensive, and Medicare or healthcare and everything.
Big conspiracy.
I will lower the price of all those things for you. And so that's left-wing populism. That's Bernie Sanders populism. And Donald Trump's right-wing populism is, I will get the factories back here so you get middle-class money working on an assembly line or something like that. But they both target the same people, the people who feel like they've been screwed over by the establishment.
And they have. They have been screwed over.
Yeah. Well, yeah. See, that it has the advantage of being true. Populism does now.
That always helps.
See, no, I think the difference is, though, that the left-wing policy set fails miserably, and the right-wing policy set, which is reindustrialization and closed borders, has a chance of being successful. So, and you see that in states, right? All the states that are run according to left-wing populism are hellholes, and the states that are run more or less from the right in a kind of a populist way, that's where everybody's moving. We're all going to Texas and Florida because it's run according to right-wing, more or less populist ideals. So, the thing in New York will play itself out. I mean, if Mondami gets elected and he actually tries to take $1 billion away from the local rich people and spend it on, state-run grocery stores and stuff like that, that'll fail. Just because it always fails for obvious reasons. You chase away all the capital and there's nothing left to redistribute. And so we'll see. I got to say, though, Mondami he's a smooth guy. He's
snake oil salesman.
In a way, Obama-like, because, you criticize him and he comes back, instead of with hateful rhetoric or, picking a fight, he calmly explains why you're wrong and why his way is better. And he does it very well in complete paragraphs and everything. So he's a politically very talented guy. And that won't save him if he gets into office and actually does all the stuff he says he's going to do. But, at least it's fun to watch somebody that is that articulate and that smooth.
Yeah, well, if he gets rid of AOC, knocks her off the TV, I'll be happy.
Go ahead.
He'll have accomplished a lot right then and there. But it is alarming that people don't understand that the reason they're in the situation they're in is because these policies were already tried and failed, and that's what dug the hole. But I guess we've gone on long enough, John, but we'll have to do this again sooner. In any event, go to rubino.substack.com and sign up for John's Substack. Best writing on the web, I will say that. And of course, go to our site, financialsurvivalnetwork.com. Make sure you sign up for your free newsletter. And John, we'll talk to you in a couple of weeks.
Great. Thanks, Gary. Talk soon.